Hey everyone, Richard Norris here. Welcome to my channel. In today's video, I want to share with you some personal insights on a recent property transaction that I've just completed on here in Dubai. Dubai is one of the most luxurious countries in the world right now. It's full of millionaires, multimillionaires, and billionaires. It's truly billionaires' playground, and there's lots of prime real estate in Dubai, and there's lots of opportunities for property investors like myself, and hopefully for aspiring property investors like you watching my channel to capitalize on. So in today's video, I want to share with you the buying process, the ins and outs of buying property in Dubai, how to find and do your research and market analysis, why I specifically purchased the property in Dubai off plan using this particular strategy, the location where I've bought the property, the developer I've bought from, and more importantly, the process that I go through using systems and data to make good decisions as a property investor. Now, throughout this video today, if you stick around to the end, I'm going to take you on the journey of how I plan to turn an £823,000 cash investment from my personal funds into over £1 million in the next 3 years. Okay, so definitely stay tuned to the end. I'm going to take you through the whole process, and I really wanted to create this video, guys, because I want to give you some insights into what I'm personally up to. For somebody who is a property investor, has a multi-million-pound property portfolio in the UK and Dubai, I really wanted to go deep and just share a bit more about my personal story, a bit more about my personal life. So if you're new to my channel, you can kind of get to know me as well. And I think it's really authentic and genuine to basically, be able to showcase investments that I'm doing as well. So, please remember when I'm talking about these numbers, investing sort of £823,000 up to £1 million of cash in properties. I didn't start here. I've not always been in this position. I've been investing in over property for 12 years, and I've worked incredibly hard. So, when I'm talking about these figures, please consider that I am humble when I'm talking about these numbers. And actually, one of the things that's been the most alluring thing for me in Dubai is actually when you come to Dubai, you level up. And one of the difficulties that I faced when I bought this property, even if you've got, say, £1 million of cash to buy property with on a one-bed prime real estate property, it's not guaranteed that just because you have the funds that you're going to get it. Because to be honest, like £1 million cash investment here in Dubai is small, right? It's like being a small fish in a big pond. You've got billionaires that are buying up 10 floors in the same block. And so like trying to find real estate here in Dubai, even if you've got cash, is hard. And so that was a valuable lesson for me, but I'll discuss that as we go throughout the video. The point I really just wanted to make is, look, even though I'm talking about potentially what might seem big numbers to you right now, like I say, I've not always been in this position. I'm grateful through the hard work that I'm in this position, and I want to share how I've done it. I want to share the insights into how you can do it too, and hopefully by watching my video, following my channel, and following my content, you can learn more about how to create wealth in your life like I have. And real estate has been an excellent investment vehicle and a commodity that's helped to grow my own life and my family's life. So I just want to share that with you. So before we jump into today's video, if you are new to my channel though, please make sure you go ahead and like the video. That will really help us, so really help get my work out there, and I'd really appreciate it. If you generally like the video, give it a like. Also make sure that you click the bell icon so that you can be notified of any new content. I release content on a weekly basis, all about property, sales and business, and some about fitness in the future. And then make sure that you subscribe as well so that you can be updated and basically get the new content when it's released, and follow my work for more property content. So with all of that being said, have you ever dreamt of turning an £823,000 cash investment into over £1 million cash investment within a 3-year period? If you have, and you're somebody who's wanting to aspire to grow your property portfolio, then in the next sort of 10 to 15 minutes, I'm going to take you through the journey of buying property here in Dubai, why I buy off-plan property in Dubai. I'm going to talk about the idea of buying property in Dubai and why that is alluring. I'm going to talk about research and market analysis and give you some insights into how strategically make decisions here in Dubai, what developers to buy from. I'm going to go through the numbers, break down the return on investment for yourself as well. And I'm also going to talk about the buying process, the sales and the legals here, because everything happens extremely fast compared to the UK. And there's a saying that goes, money loves speed, and in Dubai it's full of money, full of wealth, as you probably know, and therefore you have to be fast. I mean, I completed on this transaction within less than 30 minutes for just under £1 million. As I said, an £823,000 cash investment. With the Dubai land registry fees, it probably brought it up to about £850,000, £860,000 of a cash investment. The transaction was done and completed with the legals and everything, the sales purchase agreement, within less than 30 minutes at the developer, which was EMA, at their sales office over a coffee. That's how things work here. That's why you need to move fast in business. So with that being said, and without further ado, let's jump into like the idea of buying property in Dubai. What is the main reason why I buy property in Dubai, and what is the main reason why people like myself buy property in Dubai and buy off plan? Well, Dubai is obviously an alluring place to be right now. Many people are calling it the central hub of the world. As I alluded to earlier in the video, there's lots of wealth here. There's lots of billionaires, lots of millionaires, lots of multimillionaires. There's very successful people in business. And buying property in a place like Dubai that's attracting huge numbers of world business owners with the Dubai Free Zone and lots of new business incorporating in Dubai. Just in October alone, there were 5 million people that came in to Dubai in October. That's a huge, huge number. And that's, it's in exponential growth over the last few years. And I believe that 5 million in the last month is the biggest in a single month at that time of year. So we're in unprecedented times here in Dubai, which is really exciting, where the vision that they have to create the leading hub, the central vision of the world, really actually feels like a reality right now. I live in Dubai, so I feel it every day. And one of the reasons why I buy property here in Dubai is because the market opportunities. Buying off planning Dubai is like, if you get the right asset in prime location, you can experience anything between 8 to 10% expected returns on capital appreciation. Now, with every investment, of course, there are always financial risks, and they're only projections. They're not tangible realizations at this moment in time. However, one of the reasons why I invest in property, I have lots of associates, colleagues, friends here who have brought property in Dubai and have realized their gains already. So that the past data, when I'm buying new investments, I'm looking at past historical data to make my investment decisions. So when I've seen tangible investments of 200, 300,000 pounds being made by flipping off-plan property in Dubai within a 2-year period, it got me intrigued. And that's one of the main reasons why people buy property in Dubai. It's buying off-plan, realizing the capital appreciation, and having those exponential returns in a short period of time. Now, like I said, there is obviously downside risk to that, but there's also upside risk, which is the profit. And without risk, there is no reward. And someone once said to me, if you don't risk anything, you risk everything. And I believe that to be true. So it's about taking calculated risks. And like I said, hopefully through this video today, I'm going to show you how to make smarter investments to grow your wealth, and how smart investments can really change your financial future, and how real estate can be the commodity to do that. So the other big thing is like, a place like Dubai, which attracts so much tourism as well, and people as like a holiday destination, like doing serviced accommodation, Airbnb, even long-term rentals for business owners and expats, because Dubai is like 95% expats, right? So there's a lot of people that come to Dubai and rent because it's a very transient city. So therefore, it's a good place to buy assets for long-term appreciation, but also for strong rental demand as well. And right now, like where I live, so I live on the Palm Jumeirah, and already the one-bed apartment that I live is worth 5.4 million dirhams, which is about 1.2 million pounds, give or take. And the reason I mention that is because as I go throughout the video today, when I share my numbers with you, you're going to see where I get the future projections from and the data points to make my decisions on what I feel that the capital appreciation is going to be over the period that I'm going to hold the asset for if I'm buying off plan, which could be a 2, 3, or 5-year period, depending on the off plan investment that you choose to purchase. So the main reasons are Dubai is an alluring place to buy property. It's always going to hold its value in the long run, because if you buy prime real estate, if you buy prime property, there's only so much beachfront here in Dubai. So the key is making sure that you're buying right, buying well. Yes, Dubai has seen fluctuations, has seen some peaks and troughs, has seen volatility. But with that being said, like I said, it's all about finding the right location in Dubai to invest in. And I'm going to talk about that as we get deeper into the video. So the next thing I really want to talk to you about is basically, how did I make the decision to invest in Dubai, and like what did I look at in terms of research and market analysis to come to the conclusion of buying an off-plan investment in Dubai and the location that I chose to invest in. So first and foremost, like, let's talk about where this property is. So the property that I brought is called the Address Residences. It's called the Bayview Resort. Address, for those of you who don't know, Dubai is a signature brand across Dubai. They have the Address Residences on JBR, which is a signature collection. So it's a well sought after prime real estate kind of property. So that was one of the reasons why I decided to buy an investment with address because of the signature brand, and that usually holds a premium price because it's a place that people want to live, and it's allures luxury basically. So therefore, hopefully, it will hold its value and is a well-established brand as well. People know it like the Ritz-Carlton, the St. Regis, the Four Seasons, prestige hotel brands. So that was one of the reasons why I chose to invest in an address residences branded building. But one of the other things that you need to look at when you're doing your research and market analysis is supply and demand. Okay, and I came to the conclusion that actually the demand in Dubai for one beds was really strong. It's a very transient city. There's lots of people moving in and out of Dubai, people doing business, people on vacation, and most of the time it's like I said, Dubai is made up of 95% of expats, and there's a lot of like actually single business people in Dubai doing work for short periods of time. Therefore, the one bed market is very strong, which is another reason why I chose to take a one bed property. The other thing that you need to look at is not just the type of property that you're buying, but you also need to look at the location, and location is key. So I brought in Emaar beachfront. The developer was Emaar as well, which we'll talk about why did I choose Emaar as the developer in a minute, because that's also part of your research analysis as well, and the research that I conduct when I'm buying and making these investment decisions. So I chose Emaar beachfront because it's a prime location and it's basically the next hotspot in Dubai. So you have the Palm Jumeirah, which again, if you haven't been to Dubai before, and probably you're familiar with the landmark. So you've got the Palm Jumeirah, where I live. I'm in the central of the Palm, and then you've got Emaar beachfront, which is about 10 minutes from Palm Jumeirah. And why is Emaar beachfront, in my opinion, a good investment? It's up and coming. It's still got 5 to 6 more years left of development potential. In fact, the exact apartment that I brought off plan is a 5-year plan. It doesn't complete until July 2028. I originally purchased this property in July 2023 over a 5-year term. So that basically means that there's a lot of room for growth, a lot of room for capital appreciation in that area. The second thing is that like the location is perfect because it's 10 minutes from like Dubai Marina. It's 10-15 minutes from downtown Dubai. It has its own marina as well, and it's 10 to 15 minutes away from Palm Jumeirah. And these are all like big landmarks within Dubai where people want to live and where people want to be central to. And as you probably heard before, the saying whenever you're buying real estate investments is location, location, location. Location is key. And actually buying in prime location actually buys safety as well. Dubai is a big place and it has a volatile market. Let's make no mistakes about that. We have seen, especially in 2008 here in Dubai, it was a bad time in the real estate market, but they weathered that and they've come through that. So, real estate, as I say, if you hold it long enough, it's like the UK will always hold strong and will always come back usually over the exponential trajectory of a 10, 15, 20-year growth curve. So you shouldn't be concerned about the volatility of a market like Dubai, but what you should do is make sure that you're doing all of your research and making sure you're buying property in prime location. And the property that I purchased specifically is on the 34th floor, so it's the highest one bed in the building. It has an outside terrace, and to the left of the terrace you look over the Dubai Marina and you get the sunset in the morning, and then when you go to the right of the terrace you get the view of the Palm Jumeirah prongs, which is stunning with the sea, and you get the sunset. So it's a prime location property. It's located in the development at an excellent kind of position. All of these things are going to help to bolster the demand, make it an attractive proposition for rental income, to increase the rents, to get the best yield on the asset, to get the best return on capital invested, and at the same time to keep building safety into my model. Because like I say, if you buy prime real estate, usually prime real estate holds its value very well, and over time usually always goes up, as a general rule of thumb. The other thing is it has its own private beach. So this is one of few properties where you can buy a residence where you get an actual private beach. So even where I live here in the Palm, where I've got an amazing one bed apartment, and I feel very grateful for that, and I get these amazing views with panoramic view. The thing is, we don't have a private beach here, right? So having a private beach, property built on private beach, there's only so much private beach space in Dubai, and therefore that's another reason why I chose to invest in that location. So all of these things that I'm looking at when I'm doing my research and analysis, I'm looking at, am I paying the right market price for this? Do I think that there's strong potential for future capital appreciation based on where the development is? And I try and get in the early phases. And then, like I said, the location. key things like beachfront property is always going to hold its value, is always going to be in high demand, especially for a transient city like Dubai, especially for being holiday destination as well for lots of expats. These properties are always going to go first, in my opinion, especially with a signature brand. So who is the developer as well? So in terms of the developer, like one of the things that you need to think about is there's many developers in Dubai, some of which like Ellington Properties, Damac, Nikhil, Miras, and EMA, to name a few. Now, I chose to go with EMA, and the main reason why I choose to invest in EMA properties is because the quality of the construction is excellent. In my opinion, from what I've observed and what I've analysed here in Dubai over the last year, EMA has a great spec compared to most of the developers. The second thing is, like, Dubai was pretty much built by EMA, right? Like, that's the saying here, Dubai was built by EMA. I think the Sheikh owns 50% of EMA as well. So you've kind of got like a government footprints within the company, which basically means that in theory, even if Dubai entered difficult times in the future when you're buying off plan, in theory, this is sort of funded partly by Dubai government money, and therefore it'd be very difficult to think that even if the situation in Dubai went bad in the future, which I don't think it would, that a company like EMA would go into liquidation or have any problems for its investors, because the impacts of that would be huge, and lots of wealthy people invest through EMA. So it would just be an absolute disaster if EMA were to collapse. It would almost be like the whole of Dubai collapses, which they're just not going to let happen, right? So you can never say never, but you know, when you're doing your risk analysis, your risk profiling on these things, it builds in safety. So that's another reason why I chose to go with EMA. They're very reputable. They've got a great reputation. They pretty much built, like I say, the whole of Dubai, and the construction quality is very, very good. So whenever you're buying off-plan property in Dubai, you need to think about who the developer is and make sure you do your research. The next point I want to talk about is, like I say, choosing the right property. So let me talk a little bit more about that in terms of like supply and demand. One of the things I look at when I'm buying my investments is I always look at supply and demand metrics, like roughly how many one-bed properties are in Dubai, how many two-beds, what is the future pipeline of 1 and 2 beds looking like, and then, like, you know, for example, what is the location, where is it situated, and what is the footprint, what is the size of that property, and what is it that people want. You know, there's many villas in Dubai, and the villas are luxurious, but the return on those villas based on return on investment, when we're just talking about cash on cash, is pretty low, because you're paying in excess of like 30, 40, 50 million for prime property on the palm. There'd be great investments for long-term appreciation, but in terms of like a rental income on cash, you're going to get a low yield, which is less favorable to us as investors, and then more of an emotional buy based on the location. So you need to be thinking about supply and demand and choosing the right property based on location and numbers as well, which is the next thing I'm going to talk about. Like, do the numbers make sense? So I wanted to share with you today from a high level. I'm going to go through the numbers, what I purchased the property for, the amount of capital appreciation I think I'm going to get based on my projections, the rental income I'm going to achieve, and I'm going to share with you my return on investment, so you can see just how this is going to play out, and all those things. Now, for the purpose of this video, I'm going to keep it high level. I've already done the calculations, so I'm going to go through those with you now, and I'll summarize. I am going to put up another YouTube video on my channel, which is going to take you through all of the spreadsheets and how I basically arrived at these calculations, and I'll do a separate video on that, because you know that's going to be quite detailed and the video will get quite long. So in order for me to make the point that I wanted to make in this video today, I'll take you through the ROI now. We'll go through the numbers, and then if you want, you can hop on to another video in the future on my channel, which will be here. You can follow the link. I'll do a full breakdown and a full analysis of the numbers and the spreadsheets that I use to arrive at my investment calculations. Okay, so let's go through the numbers then. So I'm just going to look at the left right here on my screen so I can give you the numbers which I've already done. So the numbers and the return on investment. So I've broken this down. Whenever I'm buying a property anywhere, even in the UK, but specifically off-plan property here in Dubai, like, I want to break down the numbers in terms of what are my options, and I always want to have at least 3 options and 3 exit strategies. Okay, so I'll break down those 3 options for you, and you'll see honestly the returns are pretty phenomenal based on my projections here. So I want to show you that, and really I want to inspire you to go out and do this for yourself, right? Because real estate, in my opinion, is fundamentally one of the best investments you can make, because I don't know many other investments that have the safeties, the security, a tangible asset, that you can get your hands on that gives you this sorts of return. So let me just go through this with you. So option one, effectively, most people buy property in Dubai, like I talked about earlier on in the video, is the alluring proposition of buying off-plan property, getting in early, realizing the capital appreciation, and selling halfway through the development to the secondary market and realizing a profit. So if I do the numbers for option one, which is that scenario, I purchased this property, okay, for £823,760, which is the exact purchase price was 3,760,888 dirhams. Okay, and I purchased this property on the 3rd of July 2023. So that was the purchase price. Now, based on the all of the data, the future capital appreciation, having analyzed the market with very good real estate agents here and EMAR themselves, I'm led to believe that we should get between 8 to 10% a year of capital appreciation in that location based on supply demand metrics, future growth models, and all these financial analysis profiling that we do whenever we're buying an investment. Okay, I've worked on 10% for the purpose of this video. Okay, so capital appreciation at 10% a year would mean that on the £823,760 purchase price, I'm going to break it down into pounds and give you the dirhams as well, just to make the comparable. But most of my audience is a UK audience, so it makes sense to talk in pounds. And the 10% appreciation, therefore, would be £82,375 a year that you would experience in capital appreciation. And that's what I expect to achieve year on year over the next 5 years consistently. Okay, so now, one of the things is what you can do here in Dubai. Effectively, you're on a payment plan. I'm going to show you the payment plan schedule in a minute when I talk about the buying process and the pack that I got from EMA. I'm going to share that with you so you can see the payment plan. But effectively, what happens here in Dubai is you have a payment plan, and over the 5-year payment plan, once you've made 50%, once you've completed 50% of the payment plan, bearing in mind when you're buying off-plan property in Dubai, you have to buy cash. So you need to be liquid enough and rich enough, is just the honest truth, to be able to make these sizable investments cash. Now, this investment that I'm talking about, okay, is just under £1 million cash investment. I appreciate not everyone has access to those sorts of funds, but you can start with smaller investments at around £200,000, £300,000, for example, if that would work for you, and the same principles would apply. But effectively, what happens after 50% of the payment plan is completed, you can actually sell it on to what we call the secondary market. So the way that my payment plan works out is on the 18th of February 2025, so just under 2 years into the development when I bought it, the property would be able to be sold. So once I've settled 50% of the payment plan, I can sell the property onto the secondary market, but I cannot sell the property on before I've paid 50%. Okay, so the obligation is I must make at least 50% of contributions, and then I can sell the property onto the secondary market. So I could sell this property technically after the 18th of February 2025. So for the purpose of this video, I've chosen to do the calculations to July 2025 because I purchased the property, like I said, in July 23. So 2 years on would be the exact point that I could sell the property. And sorry, I said the 18th of February 2025. What I actually meant was 2026. Okay, so just after 2 years, about 2.5 to 3 years into the property, I can sell this on. That's how my payment plan works. Okay, so if I was to sell this property after the 18th of February 2026, and let's say I sold it in July, then if I had 3 years of capital appreciation, remember at 10% on the purchase price, so £82,375 a year of capital appreciation, multiplied by 3 years, would give me a profit of £247,125. Okay, so £247,125 of profit over a 3-year appreciation period if the property appreciates at 10% a year at £82,000. £375 per year, which is a pretty good profit. That's like a £250,000 by doing nothing, made just by investing my money over a 3-year period. So that would basically mean that I bought the property for £823,760. That was the purchase price in July 23, and I would sell in July 26, and I would hope to achieve a sale price of £1 million, £1,070,888,000 on the secondary market. Now, why is that realistic and tangible? Well, if you look at the data across Dubai, people have realized those sorts of returns. It's pretty standard here for the right properties. And also, like, you have to understand that there's lots of like billionaires that are coming in and honestly, they need a place to put their money, and they have too much money. And the truth is that they'll pay premiums for these types of properties. So who would be the secondary market that you'd probably sell onto, it was honestly going to be like that kind of status of like a Russian billionaire, for example. That's what the secondary market is like here in Dubai, and that's probably who I'd end up selling this property to if I chose to do option one and flip the property after a 3-year period and realize that £250,000 profit. Okay, now option number two. Let me talk you through option number two then. So, by the way, actually, sorry, just before I talk you through option number two, if you do the calculations, the £247,000 of profit means that you get a 30% return on your investment. Okay, so on the capital invested, if you realize a 250k profit in a 3-year period, your return is 30%, which is phenomenal. Okay, option number two, again. Option number two, purchase the property for £823,760, capital appreciation at 10% per year, £82,375 per year of appreciation. Now, if I wait 5 years until handover, so this property plan or completion time frame is buy the property in July 23. It's a 5-year construction period, a 5-year payment plan, and at the end, handover is the 30th of July 2028. So on handover, when the property is completed and it's tangible, if I chose to keep the property and left it to appreciate for 5 years at 10% a year, and then left it as a cash investment and rented it out, this is option two. Okay, so assuming that I get the £82,375 a year of capital appreciation every year for 5 years, that would mean that at the end of the 5 years, I would have realized an increase of £411,875 of profit in that property. I bought the property for £823,760. It went up £82,375 per year for 5 years at 10% capital appreciation. Gives me £411,875 of capital appreciation, which means that my estimated gross development value on handover for this 1-bedroom apartment that I've just brought is £1,235,635. Effectively, that turns out to be £5,758,447 dirhams. And as I said to you, and why I alluded to where I live in Dubai, I use that as a data point. This property in the Palm, currently as of today, in 2023, is worth 5.4 million dirhams. I anticipate that this property that I live in 5 years' time to be worth maybe 7-8 million dirhams, and Emaar Beachfront, which I purchased for around the 3.7 million dirham mark, to be in excess of 5 million, according to my calculations that I've just shared with you there. Okay, so I mean, these are phenomenal returns. So if I bought this property for cash and just chose to rent it out at the end of the 5 years, I would expect to rent out the property for around about 280,000 to 285,000 dirhams a year on a 12-month tenancy. Basically the same in the UK when we do a 12-month AST tenancy. It'd be a similar thing. 12-month long-term contract, not service accommodation. I would roughly expect to achieve around 280,000 to 285,000 dirhams a year, which I think is very conservative because based on the Palm, like using my 1 bed as an example, these rent out for 300,000 dirhams a year as of now. So I think I'm being very conservative with my predictions in 5 years' time. But I always like to be conservative when I'm running my numbers because I want to manage the financial downside, and everything else is financial upside is obviously a bonus and a positive. So with that being said, 285,000 dirhams a year, it roughly works out to around 61,596 pounds a year if you break that down into today's currency conversion. That will fluctuate obviously based on the exchange rate, which is giving you around £5,133 a month of rental income. Okay, and obviously there's no mortgage to pay because I said I'm just going to hold it for cash in this example. Now there are disbursements, and some of the disbursements that you pay in Dubai is you have your service charge, and on this particular property the service charge is quite cheap. It's about £250 a month. And then you have the monthly operating expenses, which is effectively on a property like this, you're paying for a bit of maintenance, wear and tear, things like that over that period on a single let property. So those disbursements work out to £740 and £97 a month. So if you take the £5,133 of gross rental income minus off your disbursements, which is your service charge, plus your monthly operating expenses of £740 and 97 pence a month, you're left with a net profit of £4,392.03 per month. And the reason I say net profit, remember in Dubai here, there is no tax. If you're buying the investment in your personal name, there is no income tax. If you buy the property through a limited company in Dubai now, you do pay 9% corporation tax. This one I've purchased in my personal name here in Dubai, so there won't be any taxes to pay. So that really is the true net profit. So annualized, a year gives you £52,704.36 per year, which is effectively a 6% return on your £823,000 investment, right, a year, which doesn't sound great. However, when you consider that in that example, you've had 5 years of capital appreciation, which is the main reason you brought OffPlan in the first place. It wasn't for the cash flow. You're making, if you look at this as like a 6-year investment and said, all right, I get 5 years of capital growth, and assuming year 6, I don't get any capital growth, you've made £411,875 in capital growth, remember, over the 5 years, with 10% appreciation a year, plus the £52,704 of net cash flow that you achieve in rental income minus disbursements in year 6. That gives you a total return, a total profit over 6 years of £464,579 in 6 years. You've just made just under £500,000 of net profit in 6 years by doing nothing, just letting the asset work for you. And that's why you should be investing in real estate, guys. Everybody watching this video right now, if you're investing in real estate, good job, keep going, scale up, think bigger. If you're not investing in real estate, I fundamentally advise you to get involved as quickly as you can, because it is a wealth creation formula, and real estate has enabled me to reach where I am today, and it will help me to change the legacy for my family forever. There's one person in every family who changes the legacy forever, and in my family, that's going to be me. And real estate will be the vehicle that allows me to change the future and the dynamic of my family's life forever. And so I really encourage you to do it, okay? Don't wait, just get in and do it, and find the opportunities and solutions and learn from people like myself and others who have done it before you to grow and scale. Now, with that being said, if you break this down into a return on investment, okay, the return on investment, how do you work that out? You take the £464,579 in net profit, divide it by the capital outlay which you invested, which was £823,760, gives you a 56% return on your investment. Again, a phenomenal return over a 6-year period, okay? So therefore, like one of the things we didn't include, by the way, is the stamp duty, which is effectively the Dubai land pre-registration fee. So we didn't include that 30 odd K on that calculation, so it'd be slightly less. But for the purpose of this video, I just wanted to show you rough numbers, okay? For the analytical people, like I said, I am going to create a separate video where I go through all the spreadsheet and cover every single cost in detail, so you can see how it's broken down. Now, option 3, what option 3 could you have? Now, this is the smartest thing to do, is buy the asset, let it appreciate for 5 years, collect the capital growth at 10% a year, and then on handover, refinance the asset and put a mortgage on it. Now, if I do those calculations, like I said, I'm not going to go through it in this video. I have a separate video to go through that, but this is what they came out as. So at year 5, it's worth £1,235,635. If I put a mortgage on it and refinance the asset at 60% loan to value, that means the new mortgage I'll put on the property is £741,381. That means I spent that £823,760 of cash buying it. And at year 5, when it completes, the bank are going to give me a mortgage for £741,381 at 60% against the £1.2 million. And that's going to come back into my personal bank account. This is what you want to do to leverage. And if we do this at a 5% interest only mortgage, assuming that mortgage interest is about 5% on that loan, then the profit per month, the rent minus the cost of the mortgage, minus your service charge and disbursements for your MOE, gives you a profit of £1,300 a month, which is a lot less than the £4,300 before. It's only giving you £15,635 per year. But check this out. Yes, you're getting a much smaller cash flow a year, but you only leave in the deal £82,379 because you bought the property for £823,760 in cash, and then going to refinance out at year 5, take a mortgage for £741,381. That money comes back into my bank. So if I want to work out the money left in, I take the £823,760 that I purchased the property for, I minus off the £741,381 that the bank's going to give me on a mortgage, and that gives me £82,379 of my cash left in that deal. That's 741,387 that comes back to me. Guess what I'm going to do with it? I'm going to go and buy more real estate with it and get even wealthier. That's the point of leveraging. Now, in this example, the return on investment goes from 6% a year of net return if I was to buy it cash and just leave it cash and not leverage against it and take the rent in option 2. In option 3 here, we see our return go up to 18.97, so 19% return on investment, because we take the £15,635 a year of net profit, we divide that by the money left in, which is £82,379, and we times it by 100 to give us a percentage, and it gives us that 19% return to the nearest whole. Okay, so if we look at the total return on investment over the 6 years in this example, we had the £411,875 of capital appreciation. We're getting £15,635 of net cash flow in year 6 with no appreciation assumed. That gives us a total combined profit of £427,510. If we divide that by the money left in the deal, the £82,379, because remember the 741,000 has come back to us, we've only got 82 left in, then we get a 518% return on investment. That's right, 518% return on your investment. Why are you not investing in real estate? Why are you thinking small? Go big. Guys, start investing in real estate. It's the #1 commodity in the world. There's no other return on this planet that I know of that gives you such phenomenal returns with the level of predictability of property. Sure, you can invest in stocks and shares. You can materialize these miraculous investments over 1,000% return on your money over long periods of time, but you take a lot of risk. You cannot control the market when you're investing in businesses and stocks and shares. In property, you can. You're investing in a tangible asset that isn't going to disappear. So even if the market drops, if you wait, it will always come back. There's no guarantee of that with stocks and shares and other commodities. Invest in real estate. Honestly, you'll thank me later. Okay, so let's talk about the buying process. Now we've got the numbers out of the way, let's talk about the buying process. So when you buy off-plan property in Dubai, the very first thing that happens is with EMAR anyway, you will get one of these. EMAR will give you a black box, which is their sales pack. And inside the sales pack, you will get this, which is called your sales and purchase agreement. I'm not sure if you can see that, but it's your sales and purchase agreement. Inside the sales and purchase agreement, you get this information here, which is effectively breaks down the payment plan. Okay, I know I'm hiding my face there. But it breaks down the payment plan. Now in here, it basically talks about the installment dates and when each payment is due, and then it has all of the particulars in terms and conditions of sale and all of those sorts of things. So that's the first thing that you get when you sign the contract, and all the payment plans are in there. Up on the screen now, you should see a screenshot of the payment plan, which is this page here. Okay, this page here, you can see how it's broken down. But for the purpose of this, the payment plan is broken into 11 installments. You have the first installment starts on the 7th of June, and that was, it says 7th of June, but I actually purchased probably 3rd of July, so that's a slight typo there. But I paid 376,089 dirhams as my first installment. And then 5th of August, for example, is the next one, is the second installment. Again, it's a 10% contribution of the purchase price, which works out to be 376,089 dirhams again. The next one is 5th of February 2024, again 10%, same value, 376,089. Then there's a series of 5% installments at 188,000 dirhams, and then there's some more 10% installments all the way up until July 28. You have the payment plan. It's here on the screen in the top left. Okay, so that is how it works. You pay it cash. Now, the first thing you do when you buy the property, when you sign the sale and purchase agreement, actually the very first thing before you sign the sale and purchase agreement, when you get to the office and you want to book the property, you have to put down a booking fee, which is a deposit that gets taken off the first installment. Okay, and I think it was about 3 or 4% of the purchase price that I put down as the booking fee. I can't remember the exact amount, my apologies. In essence, it was about £10,000. Okay, I can't remember the exact amount. Like I said, sorry guys, about £10,000, 40 to 50,000 dirhams is the booking fee that I put down, and that secures the property. Then you take the sale and purchase agreement that email give you, you read it. If you're happy, you sign, and then you basically issue a manager's check from the bank for the remaining balance. So in this transaction, the first installment with the booking fee was 376,089 dirhams, which is about £82,000 in UK pounds in cash. And then I had to pay the Dubai land registry fee, which in this on this particular property was £33,231, which was 153,436 dirhams. Okay, so the first installment was the 376,089 plus the 153,436, roughly comes to around about just over 530 odd thousand dirhams that I paid as the initial down payment, which is around 120, 130,000 pounds of cash. Okay, so that's what happens. Okay, and the other thing that you get is you get an after purchase guide as well. Now, in the sale and purchase agreement, in this document here, in the sales and purchase agreement, what happens is you have all the floor plans and everything like that. You have the finishes schedules and all of those things. And again, I may create another YouTube video on this channel all about the sales and purchase agreement and the terms and conditions that usually come with this type of property. So that's really, the buying process is very simple. You just go to the EMAR sales office, or you go to the developer's office, you select the unit that you want. They have different models and stuff, and you choose the unit that you want. And then what you do is you obviously negotiate the price. Usually on these things, especially if you're buying a property like this at pre-launch, you can't negotiate the price. These units sell out in 10 minutes. Literally, the whole block sold in 10 minutes at phase 1 pre-launch. It was done. So you have to move fast. That was my point earlier in the video, okay? And within half an hour, you've had a coffee, you've paid your booking fee, you've left the office with a contract, the deal's done. 24 hours later, you've signed the sales and purchase agreement, you take a manager's check, you pay your money, and you're done. And then you just keep paying the installments, and they set you up on an app. And then in 5 years' time, you have handover, or in 2-3 years, you sell on, you find a real estate agent to sell it on for you for profit to the secondary market. They take over your payment plan and you realize that profit, which is option 2 that I talked about in the video. Okay, so yeah, the last part I would say to conclude this video is just some challenges I faced. The only challenges I faced were the new structure. Obviously in the UK, we have legals, conveyancing, flood risk assessments, all of those things. In Dubai, you don't have any of that when you're buying an off-plan investment, okay? It's literally, as I explained, within half an hour, you're doing £1 million investments here. Money loves speed. Obviously, that was new to me. That made me level up. It was a little bit scary, to be honest. It was the first time I've done it. So of course it was scary. Whenever you do anything new, that feeling of anxiety that you get, that nervousness, is actually excitement. It's growth. So that's good. So if you ever feel like that, go with the growth. It's important to feel uncomfortable, and you've got to get used to acting when you are uncomfortable, because there is no growth in comfort. Okay, and the only other thing was that the only other problems or challenges that I faced being new here was trying to get reliable market data, and lots of real estate agents, you know, trying to build trust with them is another challenge. I spent really since November to July when I got here, so really the best part of like 7 to 10 months building relationships, and in the end it's the relationship that enabled me to get the purchase that I wanted. So you have that time frame. With all that being said, other than that, it's pretty smooth. So I hope you enjoyed the video. If you did, please go ahead, give it a thumbs up, hit that like button, make sure you click the bell icon so you can get notified of any new content, and if you haven't already, please make sure you go and subscribe, and I'll see you in the next video.